One moment, they were on the grid, their savings tucked away in bank and retirement accounts. Next, they were gone, without a trace. Hi, I'm Elle Swan. Over the next few minutes, you'll learn about a strange phenomenon that's been taking place all across the United States. Over 300 American millionaires, some of the brightest and most successful people in the country, have suddenly gone missing. What happened to them? Where have they gone? The answer is surprising and has the potential to save retirement dreams of millions of ordinary Americans. One of the first recorded cases involved Arthur Katz, a neurosurgeon in Virginia. One moment he was there on the grid. Then suddenly he and as much as $2 million vanished. Just outside Lincoln, Nebraska, Anne Marie Fitzpatrick, a local resident and millionaire, was visible overseeing her ranch, and then almost overnight her paper trail went cold. A similar occurrence happened to Jim Rosell, who owned several Harley dealerships in the Midwest. The millionaire biker suddenly went missing. Our research so far has estimated 309 American millionaires and their fortunes vanishing. Alarmingly, the numbers are quickly increasing. These stories are known to the mainstream press, but oddly underreported. The New York Times, Fox Business News, and the Los Angeles Times have all referenced this phenomenon in the past year, but they either missed the big picture or decided to ignore it. Perhaps that's because these folks didn't leave the country or renounce their citizenship or take any drastic measures that might attract media attention. But we believe it's important to document this trend since it affects all Americans who are either working or planning for retirement. In fact, these disappearances are part of an extremely large $12.8 trillion transfer of wealth that's taking place in the U.S. It involves 44 Fortune 1000 corporations, 50 U.S. banks, and the Federal Reserve. All told, we've identified over 2,300 Americans, from millionaires down to regular everyday folks, who have disappeared. In the next few minutes, you'll learn why. You'll learn what this has to do with you, no matter what your net worth. Finally, you'll learn how these disappearances are taking place. It has to do with a financial vehicle that bankers, brokers, and top government officials, including presidents, have been using since the recovery began in early 2009. A safe haven one economist called the best-kept secret in the financial world. You see, these missing millionaires aren't doing anything regular Americans can't do. They're taking money out of the conventional system, going off the financial grid, so to speak, because they found a more private, more lucrative, safer way to grow their wealth. It's a way to accumulate wealth tax-free, feel safe from the federal government, free yourself from the hidden costs of working with stockbrokers and bankers, and pocket up to 400 times more interest than what big banks offer. The last part is worth repeating. You can collect 400 times more interest thanks to the secret. I know that sounds hard to believe. At least we were skeptical until we saw the breakdown, which we'll get to later. By the way, this has nothing to do with investing in stocks or zero-down real estate or offshore investments or tax shelters or any newfangled currency craze. We call it the invisible account because government auditors literally cannot see it. It doesn't look like a savings account to their computers, and it doesn't look like a retirement account either, though it effectively allows you to do both, to save money and retire, better than anything we've ever come across. If you've never heard of this idea before, I'm not surprised. All of the states under Regulation 570, Section 4B, restrict advertising of this account. As a result, we estimate that less than 1% of Americans know it even exists. Fortunately, through our research, we came across a few of these folks, like Ralph Wilson in Dearborn, Michigan, who used this account to go off the grid and generate thousands of dollars for his church in the process. We were blessed, he said. Dr. James Herbert, a dentist in Baltimore, used it to pay for his RV and home renovations. Rachel Frampton, a single mother and former dance instructor from Milwaukee, Wisconsin, has already generated enough invisible money to buy a blue Honda Accord and fund a 9-day vacation to Ireland. Something about it just felt like the missing piece of the financial picture that no one had ever told me, she said. And Kyle Jackson, a 43-year-old factory worker from Kerrville, Texas, used this account to sock away an extra $7,000 a month. Now, because this tax-free money will grow every single year, Kyle estimates he and his wife, Karen, will have $3 million set aside for retirement at 65, and will be able to collect 6 figures a year in income. These folks aren't multimillionaires. These are normal middle-class Americans who were financially damaged by the economic collapse of 2008, but were lucky or smart enough to find a way to recover and move forward, building their wealth quickly and safely by modeling what the rich have done for years. What they're doing is not complicated. And as I said, it's not risky. In fact, it may be the least risky strategy for acquiring wealth we've ever seen. Now, coming soon, you'll learn precisely how you can activate your own account without lawyers, accountants, stockbrokers, or bankers. If you're looking for peace of mind about your retirement savings, you'll learn how these accounts survive the absolute worst conditions the markets throw at them, and how they've launched some of the largest family fortunes the modern world has seen, including the Stanfords, as in Stanford University, the family behind the McDonald's restaurant empire, and the Fosters, who I'll tell you about later. And if you're looking to consistently grow your wealth over longer periods of time, you'll learn how these accounts can turn every $1,000 into $10,000 and every $100,000 into $1 million. But before I go into those details, I want to explain exactly how the millionaires disappeared and why you should consider joining them. The first thing you should know is this. If set up the right way, the money you put into your invisible account is not taxed. So what do I mean by set up the right way? Well, you can have your account set up in a way that will render your savings undetectable to the IRS, the government, and every other financial authority. It's how the millionaires I mentioned earlier disappeared. It's a way of allocating your money within this account that makes it untaxable and invisible. In a 1985 article, the New York Times called it a loophole. In fact, the government believed they were losing so much money in potential tax dollars, Reagan tried to shut this loophole down. Of course, he failed. Perhaps it's because so many powerful people have accounts of their own. Today, Dick Lugar, Mark Warner, the Clintons, and dozens of other politicians in the wealthy elite have invisible accounts. In the past, presidents such as FDR, Taft, and JFK have held personal money in them. It's no secret that federal politicians on average are significantly richer than the average American. Why not piggyback off the simple loophole they've created for themselves? It's what the generations before us used to do. 80 years ago, millions of ordinary Americans understood and used this account to build wealth. You see, the invisible account predates the stock market, the IRS, the U.S. tax code, and even the Bill of Rights. The first one was created in 1696 in England. From there, it took a few decades to migrate to the States, where it landed in Philadelphia. 19th century farmers were the first to really start using these accounts in America. They discovered it was a safe place to store capital between harvests. Keep in mind, this was long before America's central bank, the Federal Reserve, came around, and long before the modern fractional reserve banking system was born. To this day, invisible accounts have nothing to do with America's banking system, and this is a very good thing. Why? Because they can't overextend themselves and get into trouble the way banks did in 2008. The companies that offer these accounts, and there are only a relative handful of them, have been around since the Civil War. They aren't banks. They aren't publicly traded. Therefore, they have no need to report good earnings every 3 months to justify a stock price, and there is no pressure for them to take risks to make money. They have all the good qualities of banks, none of the bad ones, and key benefits that exist nowhere else on the planet. They never lend out money they don't have. There's never been a run on the money they hold. And they pay out as much as 400 times more interest than your average checking account. Simply put, they're the safest, most lucrative accounts in existence. We haven't seen a single documented case where these accounts have failed in over 160 years. In fact, we found plenty of stories where these accounts thrived during the worst possible conditions. It's why John Gerard, head of the Institute for Financial Independence, calls this account a financial bunker for scary times. During the Great Depression, most Americans lost everything. The stock market fell 80%. FDR seized private gold holdings. More than 5,000 banks failed. In the midst of this wreckage, a young couple named Max and Verda Foster slept soundly at night. Why? Because Max, a local journalist, had $1,000 tucked away in an invisible account. In today's terms, that's more than $17,000. How is that possible? As I mentioned, commercial banks lend out money they don't have, while the companies that issue invisible accounts do not. But the other reason is that Depression-era commercial banks were invested heavily in stocks, while invisible accounts were legally restricted from doing so. So what happened to the Fosters? Well, they ended up using that money to buy an 80-acre tract of land in Modesto, California. They wanted a safe place to raise their young family and start a business. Today, that business, Foster Farms, is worth billions of dollars. It's one of the top poultry producers on the West Coast, all from that initial stake of $1,000 made possible by the invisible account. Bottom line, this is one of the safest, most effective financial tools we have ever vetted. So what is it exactly? Before I give you the full scoop, there's another detail I'd like to tie up. It has to do with the wealth transfer I mentioned earlier, and maybe the most incredible fact of all. By the way, the group spearheading this investigation into the invisible account is not a bank or financial institution. Rather, they're an independent publishing firm out of Florida called the Palm Beach Research Group. They have 70,000 people in 120 countries who read their work. Most are regular folks who are looking for different ideas to improve their retirement. They asked me to present their findings. Typically, their researchers stay behind the scenes, but as their founder, Tom Dyson, a former Citigroup analyst, said, "The invisible account is so important, we've created this video to get the word out." So please feel free to pass it along to friends and family. Post it on Facebook. Share it as much as you like. You see, as I mentioned at the start of this video, the disappearing millionaires are a part of a major shift that only 1 in 1,500 Americans has acted on. That's a shame, since banks have known about it for the better part of the last decade. BB&T has funneled $3.6 billion into the corporate version of these accounts. Citibank has invested $4.7 billion, and HSBC has moved over $229 million. The crazy part is, they're not telling a single one of their clients or depositors about this account. You won't find a single press release about it. In fact, many of these companies have given these accounts different names just so people don't find out what they've been doing. Why? Well, how would you feel if you found out your bank was putting its own money in an account that pays up to 400 times more interest than what they're offering you? That's exactly the case with SunTrust. They offer 0.01% interest on checking accounts. Yet, they have $810 million of their own money in an invisible account. And they're not the only big bank with big money socked away here. Consider E-Trade, the popular financial firm. If you go to the company's website, you'll see they offer a variety of IRA plans, 401ks, option accounts. And of course, they'll take your money if you want to buy and sell stocks through them. But nowhere on the website do they offer any sort of invisible account to the public. If you call them up, as we did, they'll say they have no idea what you're talking about. Yet, they have over $298 million of their own money invested in them. To put that into perspective, that's 17% of what their entire business netted in 2013. Keep in mind, many of the banks I'm talking about are the ones who got us in trouble in 2007 by investing our money in risky subprime schemes. The same banks who in 2009 gobbled up all that free TARP money and pocketed record-breaking returns from the Fed's low interest rate policies. Now they're collecting more interest than they offer you and me, and they're doing it tax-free too. Here are the other banks we've identified who have invisible accounts. And there's another reason banks have been moving their money into these safe havens. You see, when a bank stores money in something like an invisible account, it then technically becomes what's called Tier 1 capital, meaning it's the safest type of capital on the planet. Other types of Tier 1 capital include gold, cash, and money borrowed from the federal government. In other words, the safest assets in the world. That's why some of America's biggest corporations quietly park their money here too, including Nike, General Electric, Dow Chemical, and Walmart. Over 200 major corporations are believed to own these accounts. I say believed because unlike banks, which are required to disclose these holdings, big companies are under no such obligation. So the individual data was harder to track down. But we did learn that Panera Bread, for instance, profited to the tune of $3 million in 2001, and Johnson & Johnson added $23 million to their invisible accounts over the past 2 years. That's more than what they've added to both their stock and bond holdings. If these revelations are surprising or even make you a bit angry, then good. They probably should. This information should be in the hands of regular tax-paying Americans, not wealthy corporations and big banks. That's why we've created a special report to show folks how to get started. I'll show you how to access yours in just a minute. But first, you should know these accounts are much more than just a safe place to keep your money. As one best-selling business author and financial investigator writes, the growth is exponential. The invisible account is the purest wealth generator we've ever encountered. Consider for a moment Nathan Newsom, a 72-year-old retired forester and an Army pilot. When he was a younger man, Newsom opened an invisible account. Over time, he's seen that money grow exponentially. Today, for every $1,000 he might put away in a year, he receives $10,000 in return. Show me a single checking or savings account that does that. Better yet, show me an IRA or 401k that gives you $10,000 in a year for every grand you put in. Or consider Jim Beckett, who opened his account in the 1980s. Skeptical at first, he made sure he kept the bulk of his money in other assets and retirement accounts as well. 24 years later, Jim's number one investment was not his 401k or IRA. It was his invisible account, which averaged 6% and never lost money. If you'd like to know more about this unusual account, including how to get started with as little as several $100s, let me show you what to do. Over the past 3 years, the Palm Beach Research Group, led by Tom Dyson, has done more research on the invisible account than anyone else in the world. Tom spent a large portion of his professional career working for 2 of the world's largest investment banks, including Citigroup in London. So, he knows firsthand the shortcuts and secrets big institutions use but don't tell us. So far, he has helped over 70,000 folks from all over the world learn more about these misunderstood accounts. I'll show you some of the notes he's received from readers in just a bit. Once you see the details firsthand, especially how easy and empowering it is to take back your money from the hands of the big banks and financial institutions, I know you'll be excited too. That's why Tom has put together a comprehensive 3-part starter kit on the invisible account, which literally anyone can use, even if you've never made a single financial move in your entire life. Part 1 is all you really need to know to get started and open an account of your own, if that's what you decide you want to do. It's a user-friendly quick start guide called The Invisible Account: How to Fund Your Own Worry-Free, 100% Tax-Free Retirement. This is not a wordy academic document. It's written so the average investor and retiree can understand, and it contains everything you need to know to get started. You'll learn exactly what this account is and why it's invisible to 99% of Americans. You'll learn about the unique companies that offer these accounts and how they're able to generate exponential wealth and offer such an amazing tax haven. You'll also learn what you need to do step by step to open one. It's surprisingly easy to do. Finally, you'll hear about the small handful of experts in the field. These individuals can help you open an invisible account of your own if you're interested. Just to be clear, Tom and his team don't manage, open, or have anything to do with these accounts or the experts they recommend. They don't take fees. The only thing they do is publish objective, unbiased information. You can think of them as the Consumer Reports of the financial world. You can breeze through this primer in about 20 minutes tops. And, as I said, that's enough information to get you started. But that's just the first part of the starter kit they have put together. Part 2 is what they call the Invisible Account Hotline. It's the closest you'll get to having Tom on call, any time of day, if you have any questions the primer didn't answer. You see, Tom has spent more time researching this one investment than any other income or retirement vehicle he's ever looked into. And that's really saying something, because over his 20-year career as an accountant and income specialist, he's researched thousands of retirement investments. Tom likes invisible accounts so much he's already opened 5 of them, 1 for each member of his family, and has shifted more than 20% of his personal wealth into them. So you might say Tom has gone invisible along with his entire family. In part 2, Tom has personally written down answers to 70 real questions he's heard from subscribers, family members, and close friends. He's put them together in an interactive online course, which we'll give you access to. These aren't basic how-to questions. That's what the Quick Start Guide is for. Rather, you'll learn why these accounts are safer and potentially more profitable than stocks, whether you should take money out of your 401k to fund them, what you should do if there's a financial crisis. You'll never panic again, even if you were burned in 2008. Whether you should be worried if inflation or interest rates go up. Why municipal tax-free bonds aren't better than invisible accounts, and much, much more. The Invisible Account Hotline is typically sold as part of a course that costs as much as $1,000 on its own, but you won't pay nearly that much. Plus, you'll also get Part 3, the Invisible Account Video Library. These are interviews with real folks who have been using their invisible accounts to do some pretty amazing things. You'll hear from Ken Carter, a successful businessman from Jacksonville, Florida. Ken lost 70% of his money during the crash of 2000 and has used his invisible account to rebuild his fortune. Bob Allen will tell you how he used his invisible account to fund a golf vacation and invest in precious metals. And Michael Little will tell you about investing in a real estate partnership the day after he opened his account. Today, that investment earns him close to 20% a year. Tom and his team have filmed all these interviews and posted them at their online Invisible Account video library. Plus, in the future, they plan to add more interviews and video files as they continue to plumb the depths of this financial phenomenon. This benefit is valuable because a big part of trying something new is overcoming that initial resistance. We all have it, whether it's getting back into the dating scene after a long break, picking up and moving to that South American retirement paradise, or in the case of the invisible account, trying a completely different financial safe haven. Our brains naturally freeze and paralyze us into inaction. The video library shows how easy and liberating it can be to seize control of your financial future and take it out of the hands of the middlemen and wealth stealers. So those are the three parts of the starter kit: the report, the hotline, and the video library. Combined, these are valued at $395, but you'll get access to the entire kit at an affordable price. Before I give you the details, you should know what I've shared so far is just one part of what you'll have access to. You see, the invisible account is an idea that Tom covers regularly in the Palm Beach letter, which is why he'd like to include a 1-year subscription to it as part of this offer. The Palm Beach letter is Tom's monthly newsletter, which focuses on the absolute safest ways to protect and grow your savings. Tom was early on Symetra Financial, a stock most people didn't realize billionaire Warren Buffett had a private stake in when it went public. In fact, Buffett still has the stake today. Since Tom's recommendation, Symetra has risen 152%, enough to more than double your money. He was early on Boston Scientific, which has a hidden 15% dividend and has risen 133% since Tom's recommendation. All told, Tom's performance portfolio has 37 recommendations and 31 are showing positive gains. That's an 84% win rate. What's great about this advisory is there's plenty of hand-holding. Subscribers are never left wondering when it's time to sell or get out. If an investment hits a stop, Tom and his team send out an email with clear instructions, though that doesn't happen too often. For subscribers, these recommendations can mean a lot of money. Stephen Anderson, a subscriber from Flint, Michigan, writes, "Not only am I wealthier than I was in 2013, thanks to your publications, I am having so much more fun as an investor." And Greg Richards sent us this picture. There's the view from his new vacation house, which he bought after following Tom's recommendations. Actually, Greg tells us he's used the money he's built up in his invisible account to fund the purchase. You'll get your own invisible account kit, the report, the hotline, and the video library, as well as a 1-year subscription to the Palm Beach letter when you're among the first today to take advantage of the special deal we've put together. So what should you expect to receive as a subscriber? Well, this is a monthly publication which Tom and his lead analyst Grant Waslick write. If you're looking for get-rich-quick schemes and high-flying penny stocks, then this letter is definitely not right for you. You see, during the 2008 crash, Tom's retired father lost a good chunk of his savings, like so many others did. This experience left a mark on Tom and hardened his already conservative view of saving and investing. After the crash, when he launched the Palm Beach letter, he made it his #1 goal to help readers get richer every single day without taking big risks. So he does everything in his power to make sure they don't lose money. Every recommendation Tom and Grant make goes through a battery of tests first. I won't get into the details here, but they spend hours investigating and doing financial research. And of course, they're always on the lookout for safe alternatives to stocks, which is what they found in the invisible account. You can find every piece of research they've published, every newsletter issue, on a special members-only website Tom has built. Here, you'll also find an archive of special reports as well. These are ideas like the invisible account that deserve extra attention because they're that good. One report you'll find, and should download right away, is about a technique that literally saved Tom's father's retirement. It's called the Banker's Code, How to Make Money 96% of the Time on the Secondary Stock Market. Tom learned this technique while working at Citigroup in London. The investment bankers there used it to make money nearly every single day. But just because high finance types use the strategy doesn't mean it's not easy to learn. Tom taught it to his father, a part-time piano teacher, who picked it up in just a couple of days. Now he tells us he's making an extra $40,000 a year on the side thanks to this one idea. And it's just as effective for sophisticated investors too. Through his firm, Berkshire Hathaway, the world's richest investor, Warren Buffett, has made $4.9 billion from using a version of this technique. When you start your trial subscription to the Palm Beach Letter, you'll get a password to the members-only website right away, where you'll be able to access this special report and a slew of others. Now, the Palm Beach Letter retails for $99, and the Invisible Account Starter Kit is valued at $395. That's a combined value of $494. Though based on what you can do with Tom's ideas, you could argue they're worth a whole lot more. In fact, Tom has received notes from subscribers who have used the Palm Beach Letter strategies and made between $2,300 and $3,600 a month, $8,000 in profits, over $14,000 a year, $2,200 a month, and more. So, as you can see, it's an investment that pays huge dividends. But as I mentioned, you won't pay $494 or even close to it, thanks to the special offer Tom and his team have put together. I'll tell you about it in just a minute, but I want to tell you one more bonus you'll get if you sign up today. It brings the value of this package up to $693. It's a second newsletter called Creating Wealth, and it typically costs $199. Written by Tom's business partner, New York Times best-selling business author Mark Ford. This monthly letter gives you direct access to one of the smartest and wealthiest investors in the world. Mark has made more than enough money for several lifetimes, and he's done it without touching stocks. In Creating Wealth, he'll teach you to do the same. You'll learn why most Americans file for Social Security 8 years too late. One of the last West Coast hotspots where you can purchase a Pacific beach house for $30,000 or less. The number one action to take next time you need an expensive surgery. It could save you $50,000 or more, and so much more. All of these benefits, the Invisible Account Starter Kit, the 1-year subscription to Palm Beach Letter, the 1-year subscription to Creating Wealth, will teach you what you need to know to take yourself off the conventional financial grid and protect the assets you have, and to generate new income streams both inside and outside the stock market. If we were to sell these items separately, they will cost in total as much as $693. But if you're among the first to claim this package today, you'll just pay a fraction of that price to get started. Tom has authorized a price that will leave a lot of money in your pocket. To get access to the Invisible Account Starter Kit, the 1-year subscription to the Palm Beach Letter, which includes, of course, the Members Archive and all the special reports, and finally, the 1-year subscription to Creating Wealth, you won't pay $693 or even $193. For a limited time, you can pay just $49. I know that's a huge difference, but Tom wants you to have money to be able to open up and fund your own Invisible Account, or to invest in any of the Palm Beach Letter recommendations. One of Tom's subscribers has already made over $500,000 since signing up, and we think you can do the same. But you should see for yourself. And Tom has created an unheard of guarantee that makes it easy to give his work a try. By taking advantage of this offer today, you will get a full 365 days, an entire year, to see if this content is right for you. If at any point you decide Tom's research is not right for you, just call his customer service team and you'll get a full refund. In other words, take your time, dig into the content, try opening up an Invisible Account, test out Tom's recommendations in the Palm Beach Letter, try Mark's unconventional ideas in Creating Wealth. This way, there's absolutely no pressure or any risk at all on your end. And if it doesn't work out, you can keep all of the research reports, including the Invisible Account research, and any of the reports you download from our members site. Just consider it our gift to you. But you must respond quickly to this offer. The first people who respond will be eligible for this extremely low introductory price. Tom can't promise how long he'll keep it online. To claim your Invisible Account Starter Kit and 2 subscriptions, just click the button below. Good investing, and thanks for watching.